Welcome everybody to the Green Investment Club for July 25th, 2018. I'm going to move right into our speaker tonight. We're very fortunate to have Dave Rice. Dave is, you'll be hearing from him in a moment here, but Dave is located in Fort Myers, Florida. And Dave and his wife, Lori, I don't know if she's in the background tonight or not, or if she'll make a visit. But Dave and his wife, Lori, actually run a business called REI, Real Estate Investor Bookkeepers. And that's their specialty, is to basically sort you lot out. I know my own books. I've done a very Solomonic move with my books, and I basically take my check and I hand it to my wife. And that is my move with the books. And I found it very effective so far for it's about 20, we're going on 28 years of effective bookkeeping technique. It's worked for me. I don't know if it's working for you or not, but I don't think that's probably a good plan when it comes to real estate investing. So without any further ado, I am going to hand it over to Dave Rice and let him take over the meeting.
Greetings. Can everybody hear me?
Yes.
Okay. As Andrea said, I'm Dave Rice. Lori and I own REI Bookkeepers, and we are a boutique bookkeeping firm. We only work with real estate investors. We're actually real estate investors ourselves. We got into it after we sold the business a few years back, and did a little bit of everything. We've done a couple of wholesale deals. We've done some short sales. We've had some rentals. Right now we're doing fix and flips, one or two at a time. One's not going so well, but I guess I'm probably not the only one that's ever had to admit that. I'm going to go ahead and put my little presentation up here and just let me know. Can you see that?
Yeah.
Okay. All right. So I'm going to keep my introduction really brief tonight. I know the first rule of marketing, nobody cares about me, you only care what we can do for you, and I totally buy into that. We found that when we started real estate investing, I actually got on LinkedIn and started talking to other investors, and somehow the bookkeeping came up. My wife Lori's an accountant, and she's done the books for our businesses literally forever. And when I started talking to other investors, they were kind of surprised. And I realized that all these years, if Lori can explain bookkeeping to me, I don't have any accounting background. If she can explain it to me, I thought we had something else that we could add to the community. And it's been about a year, and we've had a really favorable response. So I appreciate, I believe it was Mark that reached out to me. Somehow he found me through LinkedIn and asked us to give a little presentation. Let's see if this sounds like any of you in the class. You're a successful real estate investor, you're an entrepreneur, but you hate repetitive tasks. In fact, you hate bookkeeping. And we find that this is very true of entrepreneurs in many cases. You're great at going out and finding deals, but the record keeping and the details just aren't your cup of tea. Unfortunately, your tax preparer and the IRS don't always share that feeling. No one gets into this business because they have a burning desire to do bookkeeping. That's guaranteed. It's not the most exciting part, actually downright boring at times. And you can insert all your accountant jokes. You can add bookkeeper right into all those jokes, and you won't offend me. But you're here to make money, and unless you're a numbers geek, numbers will put you to sleep, and most of us just aren't numbers people when you have to get down into the details. So let's see if this sounds like any of you. There's, and I hear these are the kind of situations that we run into all the time with new clients. There's money in the checking account, so you keep spending and finding properties, but maybe not so fast. you need to think about putting money aside every time you generate income. Sometimes it's a real wake-up call with new investors. You know, they've now left the job and they're out on their own. Nobody's withholding money out of their paycheck anymore. It's up to you, and you've got to think about that. So what I'd like to present tonight is just a very short, easy primer on financial statements. And there's essentially two financial statements, and let's talk about those. Financial statements are really the backbone of your business. So the first thing we're going to do is, forgive me while I fiddle my way around here, we're going to look at an income statement. And this one's pretty easy to see and pretty easy to understand. And it's essentially your revenue in all different ways, less your expenses, whatever they all are, and that's the profit. Very easy to understand. Note that an income statement is showing over a specific period of time. We do it typically over a month, and then we'll do something like year to date, and then we'll look at years. Now, as real estate investors, we don't get so shook up about months, because you can have a great month. You can have a couple of big wholesale deals come in. You can spend the next 2 months marketing and not getting any deals, and then you may have 4 deals come in the following month. So we don't get all that terribly excited about monthly financials, but we like to run them so that people can really see and understand what they're looking at. So let's look at something just a little bit more in depth. Let's look at a typical profit and loss, which is another name for an income statement, for a typical, one-person investor. Let's say in the first 3 months of this year, you had a couple of wholesale deals, $12,000. That's your income. Your expenses, we just ginned up a few expenses here. Those all add up. And what you're left with is your net income. Very, very simple. Can everybody see that all okay? So let's look at something just a little bit more in depth. In this case, let's say you've got a couple of rental properties, so you're collecting some rent, and you've got a rehab property that you have completed and sold. So there's what you sold that rehab property for. You sold a rehab property for $58,000, and you've done a couple more wholesale deals, and so you've got another assignment being there. So you've got a total income, $78,000 and change. Then you've actually sold that rehab property, and you're left with your cost of that rehab property was $47,133. So we want to show this on the profit and loss statement. You actually see the value of the property that's sold and the cost of that property. And then now what you're left with is the gross profit on that property and your expenses, and you're left with some net income. So again, pretty straightforward. So that's an income statement. The couple of key things to see about an income statement is that, number one, it's based on a specified period of time. Like I say, typically a month or a few months, maybe a quarter, something like that. Very straightforward. A balance sheet, on the other hand, is a little bit more in depth. And that's the next thing I want to talk about. So a balance sheet is a little bit different. The first thing to note about a balance sheet is it's not a report of over a specified period of time. It's a report at a specific moment in time. So as of a specific date, we think of it as a snapshot of your company. And on a balance sheet, you list what you own, which are assets, less what you owe, which are liabilities, and what's left over is equity. So assets less liabilities equals what's left over. Again, pretty simple in that respect. So let me just move on down here. Now I'm going to put something just a little bit more, let's put some numbers into a balance sheet and give it just a little bit more of an example. Let's say you purchase a property for $100,000. That's an asset that you own. You get a loan on the property for $65,000. That's a liability. You owe that. And again, make the subtraction. What's left over is the equity, $35,000. That's also known as net worth. Now, this is just a little bit more in depth of a balance sheet for a slightly more typical real estate investor. And I've split the balance sheet up into the top and bottom just so that it's a little bit easier to show on the screen. When we look at assets, usually what we see first are checking accounts, savings accounts, those kinds of instruments. That's the first line there. Earnest money deposit paid. Let's say you're looking to buy a piece of property and you've got an offer in on it. You've given them $300 as an earnest money deposit. That goes on the balance sheet because it's not an expense. You've actually taken some money out of your checking account. You've taken some cash, which is an asset, and you've moved it to another asset, which is a potential property. So that lives on the balance sheet. That's $300. It's not an expense. It's an asset. Then let's say you own this rehab property, and we just plug the value in there. It's worth $42,500. Let's say you own a rental property, and it's worth, you paid $46,500 for it, and on your balance sheet, the value of the rental property would be what you paid for it, plus whatever improvements you've made to it. Sometimes those are listed separately. And there we see the total assets. So then if I move to the bottom half of the balance sheet, we've got liabilities. And again, these are what you owe. And a typical real estate investor balance sheet would look something like this, although of course they get much more complicated. Credit cards are typically the first thing that we see. If you have a business credit card that you use for business purposes, or let's say you have an account at Lowe's, you have a Lowe's credit card, that's real common. Those would be listed here. These are liabilities because whatever that balance is on that credit card, you owe that. Then the next thing we would list are loans payable. These are mortgages or loans that you've taken out on rehab properties or rental properties. Doesn't matter if they're short-term hard money loan, interest only, long-term low interest mortgages. Doesn't matter. They need to be listed as liabilities on your balance sheet. So we get a list of the liabilities. Those add up. You can see the total there. And again, what's left over then is the equity. Now, as far as equity goes, there's a number of different things that can show up in equity, but they all pretty much are the same thing. Owner contribution is a typical equity line. That's money that you've taken from your personal funds and put into the company. There can be owner distributions. That's where you might take money out of the company and back into your personal funds. That's a distribution that shows up in the equity section of the account. There is net income, which is the income that's left over, and actually that is a number that transfers over from the income statement. So that's where we see all those numbers. And again, I can't show it to you on one screen here, but you'll see here the upper part of the balance sheet, the assets are $98,850, and the liabilities plus the equity add up to $98,850. So that's our balance sheet. Now a little bit more of a twist on this. Oh, let me mention something else. One of the questions I get all the time about properties is my clients say, well, I bought that property for $7,000, but it's worth $25,000. I want you to list it on my balance sheet as $25,000. Well, we can't do that. What we have to list on your balance sheet is what's known as book value. That's kind of another name for it, but essentially it's what you pay for the property plus what you put into it. And yes, there is market value. You know what that is. You know it's there. We just can't list it on the balance sheet. And you really don't realize that market value until one of two things happen. If you sell it and make profit, that now that increased value comes back to you in the form of profit. Or the other sort of subtle way that this happens is you go to the bank and you do a cash out refi, and you refinance that property that you paid $7,000 for it, and it's worth 25, and the bank gives you 25,000, and you pocket the money, which you don't pay tax on, by the way, and on you go and continue to build your portfolio. So you feel like, people always feel like they're short-term getting hurt looking at the value of their properties on their balance sheet, because it is what they paid for the property and not what it's worth or what they want it to be worth or what they think it's worth. So what happens then, let me just move over here. So now what happens, you see my last balance sheet was as of March. So sometime between March and the next report, we sold that rehab property. So now you see here that on the balance sheet, that asset that was that rehab property is no longer there. It's not listed anymore. It's no longer an asset. You've sold it, so it falls off the balance sheet. Likewise, if we look at the bottom of the balance sheet, we see that we still have a loan payable on the rental property. We didn't sell that, but we sold the rehab property. And so again, that loan now is paid off. So as with the asset leaving the balance sheet, the liability leaves the balance sheet and goes away. So what happened to the difference? The profit, let's hope it was profit when you sell it. That appears down at where it says net income has gone from around $11,000 to $29,000 and some odd dollars. So that's where it's realized. And this is something that, like I say, comes up all the time with new clients as they're slowly learning what they should be looking at on the balance sheet. We very often get new clients who will come in and they'll start telling me about their business, and they'll say, well, I own 10 rental properties. And I always say, well, let's take a look at your balance sheet. Well, we pull up the balance sheet and there's 7 properties listed. And they're often shocked because they've never really looked at it, or if they did, never really asked the questions. So it's vitally important that all of your assets be listed on the balance sheet. It's the only way to really know what you're looking at. So those are the 2 reports. Now there actually are more reports out there, but these are the 2 basic ones, and will give you 99% of what you need to know about your business. Just mention a couple more things. Another thing that we run into very often is clients will have multiple credit cards and not always have them all listed on their balance sheet. And it's usually a bit of detective work for us to go and track those down. But the way I get their attention is, what I tell them is, if we don't have credit cards, if we don't know about credit cards that you're using in the business, then we're going to miss expenses. And as soon as I say we're going to miss expenses, that usually perks everybody's ears up, and they say, well, what do I have to do to make sure that doesn't happen? Well, what we have to do is make sure that we know where all those are. We want to know where all those credit cards are and what's being used for business, and make sure that we don't miss any expenses whatsoever. We don't want to miss them. We don't want to understate. We don't want to overstate. We want to be accurate. And another thing that often comes up when we're talking with clients is, we want to make sure that if you own multiple properties, let's say as rehabs, we want to make sure that we're assigning every single expense that you incur on that property we want to make sure it gets assigned to that property. Likewise with rentals. If you have a half dozen rentals, we want to make sure that every expense is applied to the proper property. And we do that because we want to be accurate, but you want that to happen because, again, the IRS, when you go to file your taxes, they are going to ask for a list of all of your rental properties, and they're going to ask for a report. Essentially, they're going to ask for a profit and loss statement on each property. And it's not enough to say, well, I had $60,000 worth of expenses across 10 properties, so we'll just divide them all up. That's not enough. They want to see what has happened. And it's important for your own purposes. You want to know how each of your properties is performing. That's just part of being a smart business person. Just a couple of more things I wanted to mention. So, as a business owner, again, there's our last two. Just a reminder of the two things that we looked at. As a business owner, what can you do without, we're not expecting anyone to become an expert in financials or analyzing these things, but we'd like to have you be able to look at your own financial statements and at least know that they're reasonably accurate. How can you do that? First of all, if you're not receiving statements from your accountant or whoever's taking care of your books, if you're not receiving statements at least quarterly, preferably monthly, but at least quarterly, you need to ask why. Again, so often when we engage with new clients, they haven't seen anything but a yearly report, and they usually don't see that until tax time. And so we've completely lost the ability to look at the finances of our business and make decisions based on those if all we're doing is waiting for reports at the end of the year or even later than that at tax time. So what you want to be able to do is when you get those reports, again, first of all, get them, and if you're not, ask for them, demand them. You should be able to look at that report and know approximately your cash position. You should know roughly what you have in your accounts. You should certainly know how many assets you own. You should roughly know what their value is. You should know how many loans you have out on those properties. If you own them free and clear, wonderful. But if you don't, if you have 7 properties and 7 mortgages, there should be 7 assets listed on your balance sheet. There should be 7 liabilities for loans listed on your balance sheet. If they're not, ask. And all those things need to be made clear. This is your company and this is your business. And companies like us, bookkeepers like us, we work for you. And the more information that we can provide, the better off you'll be and the better decisions that you'll be able to make as business owners. So get answers, get educated. So this is us. We are reibookkeepers.com, and there's our information there. We work in all 50 states. We're actually in Naples, Florida, but we work virtually all over the country. And it's really interesting, real estate investors are used to working on the phone and on the computer and all those kinds of things, and we find it very, very easy between telephone, email, Zoom calls just like this. We work very easily virtually. Just a little more incentive. This is from a few years back. That's me. My previous business could hum along without me at the helm for actually a long, long time. And we took the opportunity to get to places like this because we had great systems and we had great people in place. And what I was able to do here may not be your cup of tea, but everybody wants the freedom to live the way they want to live. That's a large part of why I believe a great many of us got into real estate investing. This is actually, if anybody's familiar with the Bahamas at all, we're actually anchored off of Little Bell Island in the Exuma chain down south of Nassau. You can actually see my family in the dinghy in my glasses. It's kind of a cool picture. So anyway, my policy is, and what I like to tell everybody is, don't be a slave to your business. Find out what you do best and outsource the rest. So that's it, folks. I'd love to answer your questions and see what you think.
So I'd like to know, just can you give us a overview of how you, because to be honest, I'm actually a CPA, but I like shoe boxes a lot. Actually, if you look at my car right now, you can probably get a bunch of receipts out of the floorboards. So it's actually the wrong profession. I do mostly process type work. So how do you, I usually just download, to be honest with you, I download my credit card receipt at the end of the year.
Okay.
And then my statement, I put it in Excel, I sort by vendor, then I guess at which house it goes.
Oh boy.
So,
And you're see.
how can you help me?
Dave, I'm going to give you just a little bit of color here. We just happen to have a pretty high-level core group here, so there's not a newbie. I don't think everyone in here is probably a seven-figure net worth individual. So
yeah,
you can talk at your higher level to this group, and I think it was a good, clear message. But I just wanted to let you know where, like, this particular bunch is. These guys are pretty sophisticated, but so I'm going to give you that color before we proceed.
well, that's good to know, and I appreciate that. And you guys should be well ahead of the curve.
I
go ahead.
Pay my lawn man. He's at the door right now. So
Get a receipt, man.
get a receipt.
Record that.
Make him sign it. No, you guys keep going. Questions?
We almost need an app, don't we? Out there.
And
There's an app.
Don told me to do what he said he did, kill the IRS, and I don't worry about this shit anymore.
Oh, okay.
They need to come up with 10%
Flat
flat,
tax.
15% flat, I can just pay.
Yeah. I'm for it, with that, all the way.
So I'm just curious with your group here, and now that I understand the type of group I'm talking to, that's really good to know. Do any of you do any more than just take all your stuff to your CPA at year end? Is that what you do?
No, I actually asked how your pricing for someone doing the books, because I actually downloaded my statement. I wasn't kidding. Maybe you thought I was joking. I downloaded my statement at the end of the year, and I literally sorted in Excel by vendor. Delete the vendors. Why use two credit cards when you can use one? Delete the vendors that don't apply to any of the business expenses. And then Larry's like, you're an idiot too. I've always thought I'm an idiot. So, and then I just assigned it to a house, kind of based on, well, in July, I think we worked on this house, and in August, and as I'm going through looking at checks, who I have someone else key, I can kind of see the vendor, and I know who worked on what house, so I line them up by date. It's not very scientific, but so I mean, I would be.
I'm actually more organized than you are. That's kind of scary.
So I mean, I guess how do you, when you've got someone out of state and you've got cash receipts, the checking account plus multiple credit cards? When you say bookkeeping, I'm really looking at the bookkeeping side, not the, I mean, actually I was joking with someone about fair market. I said, ask them whether the people you can account for at fair market value or mark to market, but you already addressed that. So,
Okay.
I'm really interested in how you
would you like to are you interested in kind of how the process works for somebody like us? Is that your question?
yeah, and pricing and whatnot, yada, yada, yada. We can take pricing offline.
Okay. What we do is, First of all, we use QuickBooks Online, and I'm sure everybody's at least heard of QuickBooks Online, cloud-based accounting software. We set it up so that we have access to it, our clients have access to it, their tax person has access to it, and we always tell our client, you're free to look, just don't touch if you can possibly help it. We'd like them to stay out of it, but we want them to have access to it. We want them to own those books. And what I do is I set up with every new client, I set up a unique email address so that every time that client generates, they do a closing, they get a HUD statement, they get utility bills, they get receipts, they email those receipts to me, they take pictures of receipts with their phone. All of that information flows to me, and with QuickBooks Online, you may or may not know this. I never know if I'm talking, if I'm preaching to the choir here, but with QuickBooks Online, your bank accounts, your credit card accounts, those are all electronically attached to QuickBooks so that those transactions are flowing into QuickBooks as your receipts and closing statements are flowing in via email. We match all those up. We make sure that every receipt goes to the proper property, and that's how we build the statements. Now, one other thing that we do that we think is a huge benefit of QuickBooks Online is that every receipt, every HUD statement, everything that we get, we actually attach it electronically to the transaction inside QuickBooks Online. And so what that creates is a permanent record in the cloud of everything that happens. Now, I never tell clients to keep their receipts or throw them away. That's entirely up to them. But we're building that record as the months and years go by. And if we need to look back and figure out what happened, we can. If our client needs to look back, if their tax person needs to look back, if, God forbid, the IRS ever has to look back, the information is there. And it's one of the real values of QuickBooks that we see. And I every time I get a new client, even if they already have QuickBooks Online, I've yet to see a single document attached. And so that's one of the services that we provide. Now we base our charges on the number of transactions. I don't care how much money you make. We only care how much work it is for us. And we look at those on a case-by-case basis, but suffice to say, we start at about $475 a month to take care of all of that. So the way I tell people is one crappy wholesale deal and you can pay me for a whole year to take care of your books.
Are you guys accountants, or do you have an accountant with your company?
I couldn't hear you.
Are you an accountant, or is there an accountant in the company?
My wife is an accountant, but we don't act as accountants. We act as bookkeepers, and we make that very clear. We aren't tax people. We always want our clients to be working with their own, usually local, not always, but we want them to be working with their own tax person. And it'll be interesting to hear what the gentleman who's a CPA feels about this. But our general experience is that we're pretty darn good at bookkeeping, and we prefer to leave taxes to the experts. And
he's a better real estate investor than he is CPA. So.
But what's interesting is most of the tax people that we run into, once their tax business gets to a certain point, they don't want to do bookkeeping. So it's a fairly good situation where we like to work our side of the street and stay away from the other side of the street. So it's always one of my first questions is, do you have somebody that you count on to take care of your taxes? They usually don't want to do your bookkeeping. And in fact, as a bookkeeper, there's no licensing required anywhere whatsoever. Anybody can say they're a bookkeeper. I can tell you that we're in a pretty big bookkeeping group nationally, and I'd say 99% of them have zero accounting or bookkeeping background. They kind of learn it on the fly. It put us well ahead of the game. Number one, we're already real estate investors, and number two, Lori's actually has an accounting degree. We're both graduates of Wisconsin many moons ago, but she does have an accounting degree, so she really understands what we go through to actually set up loans, and all the different things that come into setting up a proper set of books.
Well,
You might realize.
I think it's safe to say if somebody actually has not studied accounting and they don't understand the basics of a dual entry accounting system, that it's probably generally a good thing for them to get at least some knowledge, some functioning knowledge of P&Ls, balance sheets, credits, debits, cash flows, all of these things.
No doubt, and I can attest to that because of the books that we take over. When people have either tried to do it themselves or had somebody that didn't really know what they were doing, I mean, we literally are undoing tons and tons of transactions because things have been done so wrong.
So I assume that you prepare you prepare tax-ready financials for people. Do you do anything beyond that as far as not just tax-ready, but like on demand? For example, if I want to look at the net worth statement or something like that, if I'm going to get a loan or anything else for clients besides. In other words, I guess the way I should frame this is within what you do, and you mentioned it's transaction-based, are there a series of reports that you generate that I know you've mentioned you got P&Ls, you got cash flows, and so forth. What are the series of reports that you provide for clients within that?
Well, a typical month-end report package for us would be a balance sheet as of the month end, a profit loss statement for the month, and comparing to the previous month, and profit loss year to date, and then if the client owns multiple rental properties, we can give a report that will break down their monthly and year-to-date for each rental property. That's part of what we provide. We also, when a client has a rehab property and sells that property, they often like a separate report of that. Sometimes they are partnering with somebody, or for whatever reason, they like to have a copy of that. We can, because of the way we do our work, we can generate that relatively easy, and we provide those, when necessary. We don't, net worth is a little bit more of a question, only because what I suspect you're asking is if it's above book value, we can't generate that report. Does that answer your question?
Yeah. No, I was just curious about the series of reports that you generate through bookkeeping services. Okay. I'll tell you what, Dave, we appreciate it. Actually, I think it's a very clear message, and having worked as an independent sales representative, I certainly understand that a lot of people in this business have no clue how to do books and need lots and lots of assistance. And I've seen friends and colleagues and business associates do that. So thank you for coming tonight. We're going to have a roundtable discussion now, kind of sit and talk, and we appreciate your time, and look forward to hearing from you again.
Thank you for having me. I appreciate the opportunity. I hope I didn't talk below everybody's skill level, but it's good that
you never know the audience. You didn't, but I wanted to when we got into the Q&A, I wanted to step it up, like to let you know that it's a pretty sophisticated group here, so I wanted to know that.
Good deal.
Thank you very much. So we appreciate it.
Sure thing. Thank you much, gentlemen. Everybody, appreciate it.